start. Let's take it across to Kunal. Nooresh, find out after the listless last week of August. Kunal, are we likely to see a flare up in the markets? We've already made it to 19,500.
But it looks like entire listless August has been wiped out on just one single day of price up move, because today's move is not just about the index moving up higher, but it's the sentiment across major of the stocks which have moved up higher, the likes of BHEL, most of the names which you've highlighted, the PSU pack, GAIL, NTPC and ONGC moving up 4%, 5% higher, and that too on a very consistent basis on an intraday charts as well. So even though intraday traders saw a bit of a pop up into these stocks, there was a good participation which is still there after the opening for these stocks, and these stocks have moved up higher from that 0.5% to 1% gap up for these stocks individually. So I think that participation levels have increased for the PSU stocks. This could probably boost the sentiment further for the sector. The Nifty coming back above that 90,400 mark. That is also one of the very interesting aspects about the market today. Bank Nifty making a comeback again about that 44,500 mark, or just about at those levels. So very good session for the index as well as for the overall market today so far.
Nooresh, I want to pick up a couple of these exchange stocks and talk about that. BSE, of course, wherein the incremental news is that the buyback price has been increased to over 1,000 rupees versus 800 rupees earlier. And MCX, wherein we at ET Now pointed out yesterday that there was the first mock session held, which went out without any glitches. And the second one is likely to happen today. If that does work out positively, the company would be able to perhaps adopt the new software, which has been the biggest overhang. They have been losing almost 125 crores per quarter as cost of the transition as well, and that will go away once this new software is developed. And on account of that, MCX is trading high by almost 8% in the hopes that the new software will be adopted. But technically speaking, on MCX as well as BSE, will you still buy?
So would still be a buyer in MCX. If you look at MCX, today's price at 1600 to 1800, the stock was at 1600 back in 2012. So that's the kind of underperformance, and that is unusual for an exchange stock. Given the market conditions over the last 10 years. Then if we go back to 2020, it topped out around 1800, and then maximum high was around 2100. So the stock has done nothing for the last 2 years or the last 10 years. So it's been a lot of promise, but no delivery. Finally, if this change which is going to happen could be a trigger for the stock, wherein I would expect it to eventually cross all-time highs about 2100. So it's a buy at current levels, add on dips, and ride it on for a much bigger move. Technically, in the short term, it's given a cup and handle breakout, 4 attempts made around 1800 odd levels, 1700 odd levels ideally. So it's a big breakout, looking at it as a stock which could go towards a long-term high. BSE is also interesting, just that it has moved up quite a bit in the short term. I would prefer MCX given the underperformance for the last few years.
BHEL, of course, has seen an OI build up 49%, 11.5% higher on the stock. MCX, India Cement as well. What a move. In fact, if we could just bring up the intraday graph, a flat better part of today's trading session, a mild bit of pickup, which got sold into. And then now again, the stock is picking up all the way to its day's peak. A 9% solid move coming in on India Cement. Kunal, let's walk through the chart of not just India Cement, but the entire cement sector too.
Well, in fact, the entire sector has been an underperformer. So I think Ultratech Cement has been lying in a range over the last few weeks. India Cement, this could be a strong breakout move, because I remember, I think 3 or 4 weeks back, the stock had shown a very strong up move coming back towards 250, 255 odd mark. From there, it corrected back towards 230, 225 levels, and now it's made a comeback again after an 8%, 9% up move so far for the stock price. So this could be categorized as a strong breakout move or a swing breakout move for India Cement. And then we look out for higher targets. So I think the first major resistance for the stock on the last 6-month or 8-month basis is around 320 or 300 mark for India Cement on a round-off basis. So I think we could now be looking at those kind of targets for the stock price. And this also gels in with the entire market mood and momentum that risk on is back in the market, looking at the surge in the high beta stocks. So I think in that aspect, we should probably revise the targets significantly higher.
Yeah, quite a bit of move on India Cements. Actually, let's take that across to Rahul Shah as well, who's joining us to talk to us about the fundamentals. Rahul, let's begin by discussing India Cements and the cement pack itself. What explains this 9% move?
Hi, good afternoon. I think obviously two things about it. I think we have a neutral rating on our India Cement, so I think we are not so positive in terms of the valuation perspective and then the business perspective post the numbers which they reported in this quarter. So my sense is I think you have other better bets in that perspective. But I think one thing is visible. I think where we've been seeing the price action, the stock has been quite stable even post numbers also. And I think with a huge volume action. So maybe some activity which might be going on, looks like that's why the stock is up. Rest, I don't think so. Any other thing which is happening in terms of fundamental perspective as what it looks like and as a cement play. But if I have to compare with the other cement players, then I think the story remains intact for the entire cement as a basket. If I look at it, I think way the thrust of government by spending on infrastructure, I think way the real estate. We are looking at the demand in the real estate sector and the way the sector has been doing well. So I think there's two reasons. And third, I think way we are seeing the overall demand in terms of the capex trend, which is coming back in India. So I think this all three factors, the demand will remain firm. And I think what we've been doing a channel checks with most of the cement manufacturers, what we gather is I think that demand is quite stable in terms of the entire in spite of the monsoon season. So I think all these factors augurs well for the cement. So I think I would continue to remain positive in the cement as a sector as a whole.
Ashok, Leyland August sales have come in and they've come in higher by about almost 10%. Just to give you a recap of how the auto sales have panned out so far. For M&M, the automotive segment has delivered much ahead of what the street was anticipating. It's a 6% uptick coming in on a month-on-month basis. For Maruti as well, a 4% uptick on a month-on-month basis, 14% higher on a year-on-year basis at about 1.8 lakh units. For Eicher Motors, the VECV, the CV segment has performed way better. So that is definitely higher than what the street was anticipating. But it's the two-wheeler segment which has actually been tempered. So be it Bajaj Auto, that's been definitely sub what the street was anticipating. It's a 7% month-on-month uptick, yes, but the street was expecting a higher figure. Even for the tractor sales, they've fallen short of expectations. So it's a subpar number from both M&M tractors as well as Escorts as well. And this is only compared to what the market analysts were expecting at large. But Rahul, what is your reading of auto sales and more importantly, what the stocks are doing on the other hand?
So I think auto as a pack, I think has done well. And I think now what we believe is I think the numbers have been mixed. And I think as per our expectation, most of the numbers which have been reported are monthly numbers are as per our expectation. So two, three things I think what I understand is I think obviously CV and passenger vehicle to be precise. I think what we've been doing are dealer checks. I think where we are seeing that inventory is on the rise, and I think that could be a little bit sluggish in a couple of months. I think the demand might not be remain the same what it is. That is one thing what we do. But overall, with the new product variants and all, I think should come back as the festive season comes back in next couple of months. So I feel that remains intact. Secondly, I think. Commercial vehicle, what we have seen CV cycle getting revived. I think both Ashok Leyland and Tata Motors also should remain firm in that perspective. So I think these two stocks looks interesting. Thirdly, I think two-wheeler space. I think Eicher and TVS. TVS, I think if you look at it, has done very well and in last entire year and one of the best performing stock in the entire two-wheeler space. So that also looks interesting at this juncture. So I think this three remains the top bets in the entire auto play.
Those were the top bets from the auto pack, but let's go. Rahul, the question is, do you think the PSU stocks are ripe for a reboot? And if yes, which of those verticals will you pick first?
So I think if we see that, I think after a long time, we've seen that PSU is coming back as a sector. So I think obviously we saw PSU banking doing very well. And then I think they've been just a momentum has continued. Secondly, I think if we see a lot of PSU rail stocks or maybe PSU as a whole defense as a play, everything, all of them has come into and maybe a different story building up in each of the segments. But I think obviously they've done well and looks like continue to do well going forward as a whole also. So I feel that still I think a few select pockets like maybe some companies like REC and PFCs, they have been done very well, but still after the stocks being moved up, almost 50% or maybe higher in last 1 year or so. But the momentum is continued. The valuation looks quite attractive with a good dividend in play, and plus the most important, I think, the business guidance what the management is guiding for the next couple of 2 years. I think that they're poised to do it. So I think what has changed is I think the market never used to give the valuations, and I think used to be under-owned by the most of the investors. So now what has happened in last couple of quarters, I think the numbers have come and most of the companies, and plus the re-rating has happened by investors' interest getting into it with the oral market as well. So my sense, I think the sector which I pointed out, I think you should look at, I think OMCs, I think obviously the stocks have declined anything between 10 to 15% in last couple of weeks. I think this becomes a good momentum play from here as well. I think the risk remains very minimal from here. So I think OMCs, I think, as I mentioned, the power financer companies like PFC, REC, power companies like NTPC, after a long, long time, the stock has done well. So I think all this entire theme as a whole, as a PSU, as a pack, I think there's all these pockets will continue to do well in spite of they've done well in last 6 months.
Okay, quite a bunch of PSUs which are holding out. Let's see what PVR as well is up to. They've recorded the highest box office month of all times, and they've actually broken the highest daily admissions and box office collections as well. While today the stock may not be holding out and it's a little tempered at about 0.6%, but around the 1780, 1750 kind of levels, Rahul, what's the take on PVR purely because of the sensitivity to box office hits?
So as you rightly pointed out, I think a couple of hits in this month and new releases which hit it, and they've done quite well. And I think we've seen that the collection by 3-4 movies which have come up and they've done quite well. So I think this obviously with this price sensitivity, I think this stock has done well. So I would continue to hold on from the current levels. I think I would not get into the stock at this levels. The stock has already run up. So I don't think so in near term any major upside is there available in this stock. So I would rather avoid investing at this point of time in PVR.
Okay, so that's the take coming in as far as PVR is concerned. Shifting focus to what's happening in the other sectors as well. And real estate is one space that was doing quite well for itself, especially after that Mumbai real estate data that had come in talking about the record sales in the month of August despite the increase in the ticket size that we have seen. Nooresh, from the real estate pack, whether Mumbai focused or otherwise, which are the stocks that you would make your top recommendations? Nooresh, you'll have to unmute yourself.
One stock which has not yet broken out on the real estate pack is Brigade Enterprises, which has been testing that same 600 mark for the last almost 2 to 3 months. So that looks the most promising one on a technical breakout basis. The next one would be to look at something like DLF, which has done really well. Kolte Patil, which has done well in the near term. But another name I will be watching out for is Godrej Properties, because that has been sideways for quite some time. If that can cross 1750, that would be a big fresh breakout out here, and it becomes a Bombay play as well. So would look at Godrej Properties and Brigade Enterprises.
Rahul, what's your take then on the realty market and whether you would go region specific and, you know, focus on the Mumbai region plays?
Sorry?
No, just wanted to understand where is your preference within the realty market, and especially the data that we've seen from Mumbai, that it's managed to clock the highest ever, you know, property registrations in the recent times. Would you be tilted towards the MMR region specific players?
So I think if you talk about the entire sector as a whole, after last financial year, if you look at, I think the 43% sales growth in most of the entire real estate sector as well, which is a good comeback. And secondly, most of the large real estate companies, maybe MMRA or NCR, or maybe a focus towards Bangalore or maybe so most of them have guided a steady year from here, and maybe in next couple of quarters also could be a steady for them with a guidance of anything between 15 to 24% in the growth. So my sense is this sector as a whole will continue to do well and is poised to do well. So at that name, what the preference is, what we like is obviously the Godrej being in the large space space, which we continue to like. With secondly, I think Luda, which we've done quite well in recent times, but we continue to prefer that. And thirdly, I think what we believe is, I think in a Bangalore markets, I think two stocks which continue to do well is Prestige and other one is Brigade. So all these 3-4 stocks and the entire real estate sector, we continue to prefer all of them.
In the real estate pack from across the country. But Kunal, a lot of these buzzers like MTAR Tech, even the likes of Data Patterns, the smaller defense companies at that, and you also have the hotel companies, the likes of EIH Hotels doing quite well for themselves, and the momentum has been building up for the last many days. Would you still buy these names?
Not MTAR Tech specifically out of the names that you mentioned, but I think Data Patterns could be an interesting bet. The stock went into a 5 or a 6 day correction, had come back towards 2,200, 2,225. That was the low the stock had made 2 or 3 days back, and it's now made a comeback again. So when stocks rally up higher, go into a retracement or a correction, then move up higher, we call that as a staggered or a steady uptrend for the stock price, and the previous low, swing low for the stock becomes a support. So I think in this case, from the previous support of 2000 or I think 1950 for the stock price, the support has been raised up higher by almost 300 points to 2200, 2250 mark for Data Patterns. That could be an interesting bet. From the hotel space, I think Indian Hotels is something which I would stick to, because that's a chart which has come back after 2 or 3 months of consolidation. We were discussing this a couple of days back, that how the stock has shown price volume breakout, coming back from 380.85, which was the breakout point for the stock price, to 410, 420 plus mark, where today the stock is trading. So that's a much more stronger as well as a better bet from the hotel pack.
Okay, that's what the take is on hotels. But let's get in some closing trades as well on that note. Nooresh, what's on your list?
So I'll be going with Power Grid. That's the only stock which has not yet broken out in the public sector enterprises. The whole PSE basket has done well. The recent highs for the stock are 250, 253, which is where it is trading right now. So this could break out over the next few sessions.
What about you, Kunal?
I'll go with MCX even after this 8% up move for the stock price. I think this could be a huge breakout for the stock on the weekly as well as on the monthly basis. So would go with MCX as a closing trade.
Okay, you know what, I also want your view on TVS Motors, but before that, let me go across to my colleague Shah to set the context as to why we are talking about TVS Motors, because the month of September and October is something which usually has seen big up move for this counter. Let's go across to Shah and get that context set. Shah?
Well, yes, historical evidence suggests that strong seasonality factor plays out for TVS Motors in the months of September and October. Now, if we look at the last 12 years, TVS Motors has given an average return of about 10.1% in the month of September. Only in the last 1 out of the last 12 years, it has given negative returns. And strong September is usually followed by a strong October. So in the last 12 years, TVS Motors has given an average return of about 11.2% in the month of October, and only in 3 out of the last 12 years it has given negative returns. So this clearly shows that TVS Motors is an excellent play on the festive season, and this time festive season is 3 weeks longer than usual. So Diwali is in mid-November instead of mid-October, and hence this could also be a catalyst for the stock in the near term. Analysts say that TVS Creon, which is an electric vehicle scooter which was launched last week, could also be a near-term catalyst for the stock going forward. As far as the export demand environment is concerned, it has been sluggish for the last few quarters, but analysts do expect that perhaps some recovery is expected to come in from this quarter, that is the second quarter of FY24. So improving market share in the ICE scooter segment, robust traction in the electric two-wheeler segment, and strong pipeline in the two-wheeler electric segment are some of the positive triggers for the stock going forward. So yes, historical evidence suggests that strong seasonality factor has played out for the stock in the months of October and September. Let's see how it pans out this year.
Shah, thanks so much for that. Nooresh, you heard what my colleague pointed out in terms of the historical evidence. Would you concur with that view? Anything on the charts that you would want to talk about?
So TVS Motors as such has been in a strong trend for the last almost 1.5 year. So out here, it's actually getting into a zone where you get a little uneasy given the say move which has happened in the last 1 month, last 6 months. So the risk reward is not great here. So I would be avoid the other auto names. Still look much better.
That's a take coming in on TVS Motors as well as the rest of the auto pack. Time now to slip into a very short break. But as we do that, Rahul, thank you so much for joining us. Appreciate your time.